Warren Buffett is one of the most widely known investors in the financial world. His current net worth is north of $85 billion, making him one of the most wealthiest people in the world. He gained his wealth in investing in stocks and is known as one of the most successful investors of all time. Let's go over the 10 ways that Warren Buffett invests. Number 1. Invest in companies that have a moat. In medieval times, moats were used to defend castles from outside invaders. These moats could have been tall walls or wide rivers that surrounded the castle. In today's financial world, moats are anything that gives a company an advantage. Things like strong branding like Apple's iPhone, or logistics superiority like Walmart or Amazon. Number 2. Don't watch the market too closely. This is something that sounds extremely easy to do, but something very hard in practice. Majority of the people who purchase stocks will stare at their shares the entire day. This could cause them to buy or sell based on their emotions. Buffett recommends using that time to have a deeper understanding on their annual or quarterly financial statements. Number 3. Invest in what you know. Before you invest in a company, you should understand their business and how they make money. In the past, Buffett avoided technology-related companies for this very reason. He simply didn't understand it. This proved to be a good move during the 2000 dot-com bubble, as investors didn't invest in profitable companies, but rather they were buying into the hype. Number 4. Invest in cheap or value stocks. Warren Buffett's investment strategy at its very core is value investing. Another way to put this is that he estimates how much a stock is by using the company's financial statements and tries to buy it at a cheaper price. Similar to when you're buying meat at a grocery store when it's on sale, rather than going out and buying it at full price, or even worse, buying it at double the price. Number 5. Invest long term. Buffett always says that the best holding period is forever. This doesn't mean that Warren Buffett never sells. In fact, Berkshire Hathaway sells and trims their positions frequently. What Buffett means is that he goes into a position with a long-term mentality. Buying a stock because you think they'll have a good quarter or you're expecting good news to come out simply isn't Warren Buffett's investment way. Number 6. Be fearful when others are greedy, and greedy when others are fearful. This is one of Warren Buffett's most famous quotes. Some ways to spot greed in the market is when investors are overly optimistic. When you hear some close friends or coworkers tell you that it's free money and it will never go down, are all red flags that the market hit a certain level of greed, which could mean that the market might sell off soon. Number 7. Invest in good management. One of the most important things that Warren Buffett puts emphasis on is trust. He will only invest in companies where he trusts the people running the company. In the past, Warren Buffett often puts a considerable amount of time in his annual shareholders' letters praising the leaders and CEOs of the companies he invested in. Even his own company, Warren Buffett relies heavily on his right-hand man, Charlie Munger, for any investment decision he makes. Number 8. It's better to stay out of trouble than get out of trouble. Buffett said many times about the idea that wise investors say no more often than they say yes. It speaks to the mindset that you should think things through before you act. It's tough to get back from a 30%, 50%, or even 100% investment mistake. Remember that if you make a 50% investment mistake, you would need to make a 100% return just to get back to where you started. Number 9. Invest in products that will stand the test of time. Warren Buffett tends to invest in companies that have boring products that can stand the test of time. Example of this will be Coca-Cola. Coca-Cola barely changes their products or even marketing from year to year. They have a soft drink that is somewhat the same for the last 127 years. Even now, it's hard to imagine a world without any Coca-Cola. By investing in these companies, Buffett can ensure that these products won't be replaced easily by disruptors, alternatives, or cheaper outsourcing. Number 10. Cash is king. Cash is a big deal to Buffett, and he keeps a lot on hand. Buffett once said, "An opportunity comes infrequently, and when it rains gold, put out a bucket, not a thimble." When the financial markets crashed in 2008, a lot of investors lost their money buying at peak prices. Buffett keeps a large cash position for this very moment to acquire companies at a discount price. Before 2008, there wasn't a large acquisition on his side, but after the crash, he invested heavily into companies like Goldman Sachs, Bank of America, which resulted in big returns. Thanks for watching.